Hey everybody, welcome back to FSP Forex Stock Predictions. Hope you're all having a great weekend. It is time for the weekly trading breakdown. This is when I go over this past week's previous positions and we analyze them to see whether they have won or lost. So without further ado, let's get straight into it. Right, guys, so the first position we were looking at trading was on Euro USD in the 4-hour time frame. I'm going to be linking the videos above at the top right hand corner of your screen so you can actually check out the initial post and the published video of this specific position that we were talking about. Right, and what we were saying is we were looking at price coming back down to retest this support zone. We had an order block entry to go long. Now, we were suggesting that this is a counter trend setup, meaning that we have been bearish on the daily. Price has been just making lower lows, but we were ranging within this area here. So we thought if price does come down to test this order block zone, it might pick up some liquidity and give us a reason to go long. It did not do that. You can see we got stopped out and price definitely came all the way down, retested this new level of support as resistance, flipped it as resistance and broke this barrier and headed south. No worries, we took a small loss. Remember, we should be grading our setups, and if we are not trading with the trend, we are trading against the trend. That is a counter trend setup, and with counter trend setups, we should be risking a much smaller lot size, right? We should be using proper risk management and always risk smaller because this particular setup would not be graded as an A-class setup because we are going against the trend. So that is one thing we have working against us. Therefore, we should risk a smaller size. If we have all of the things working together with us, right, and we have all of our confluence met according to our list of rules and criteria that we use for ourselves, that we derived from us back testing a certain setup, then we could class that particular setup as, and we could call it maybe a grade A setup. Then we would risk our normal amount. But you guys have to practice proper risk management, because if we would be risking the same amount on a setup that does not have all of the confluent factors working together, then that is obviously very, very bad news and could definitely damage our accounts. Therefore, when we have things working against us, we grade our setups accordingly. This was a counter trend position because on the daily we were still bearish, right? This is on the 4-hour. We are still bearish on a higher time frame. We wanted to go long, counter trend. That means we risk a smaller position because it's going against the trend. Hope that makes sense to you guys. Let me know in the comments if you need some further explanation with this, because risk management is so important when it comes to day trading. All right. In fact, I would say it is probably, if not the most important thing, because day trading is just conserving and managing our risk, managing our capital, right? We don't want to blow our accounts on every possible setup. If a setup is not as good as an A-class setup, we risk a smaller amount. All right, so we took a small loss on this. We broke through the support zone. Now I'm going to delete this order block zone right here. Right, now look what happened. Pretty interesting. Once we broke through the support zone, we did have another order block right here. Let's delete this. You guys can see we had an order block right here. Price came up, retested this order block zone, and came back down. So that would have been a nice entry to go short for anyone that was looking for another reason to go short once we broke this major support zone. So now that we have broken this again on the daily time frame, we still have that giant descending trend line intact. There you can see it. Look at that giant daily candle that just pushed through. It is amazing to see that if we just started shorting at the beginning of the year, we would be in major profit. Right, it's very difficult to pinpoint a reversal. So just be wary of that, guys. Right, this descending trend line still intact. We can even extend it a bit further. Right, so let's see what Monday brings with this pair. So far, we are looking for more reasons to go short. On the daily, we have the MA lines underneath the MACD's histogram crossing over once again, giving us space to move further south. All right, so that was that setup. The next one we were looking at was on the DAX, right? The German 40, and this was a similar setup. However, this is using the Bollinger Bands. And right, and this is a particular new strategy that I have been back testing and forward testing. And this one gave us no entry. But basically, we were saying that should this support hold, we could start looking for reasons to go long. Once we see the candles get smaller and smaller, we would have needed to see a bullish engulfing candle taking out previous resistance. We saw nothing of the sort. Price just broke lower and lower, which did not give us any entries. So we can delete this, delete this. No entry, no loss, no reason to enter, which is fine. We still have a little bit of divergence on the MACD's histogram, slightly. However, we can see that we are clearly bearish. So maybe once we see price retrace and come up to the top of the Bollinger Bands, we will look for a bearish engulfing candle once we tap the top side and give us another reason to go short, because we are looking for short setups. We also got to be aware of fake outs, right? The stock market is moving very, very low. The major indices are moving very, very low. We are nearly on the brink of recession territory, right? We have been for a while, but we are moving to crucial levels. So we need to see what happens. If we do not see a bounce soon, then things could be looking pretty even more bearish than what they are. All right. So remember your bias. We are at crucial points. So just let's see what the market does. We don't need to jump in and assume that this is the bottom. We are going to nail the bottom and we are going to buy now and ride this thing to the top. We don't know that. We have to practice our proper risk management, and we have to only enter when we see our setups play out. Right? Don't just jump in. So we saw no setup here. If we see these candles get smaller and smaller when the market opens this week, we could maybe see a bullish engulfing candle, but I would want to see it take out previous resistance before looking for any reason to go long, because we are clearly bearish across the entire financial market spectrum, right? Even crypto, right? Although there are a few cryptocurrencies that have been popping off. However, they aren't the amounts that we would like to see, right? These are just retracements, right? These could be a relief rally within a bear market. So just be careful, guys. Remember to choose your bias before jumping into any position. Choose your bias and then look for a setup that matches your bias. If you are neutral and you don't have a bias, then wait. There's no harm in waiting. Wait until the market gives you a bias, and then look for a reason to enter. All right, guys, so on that note, let's wrap up this week's weekly trading breakdown. If you find these videos helpful, please would you go ahead, hit that like button, hit that subscribe button, hit that little notification bell, leave us a comment in the comment section, and as always, I will be seeing you all in the next video. Thanks for watching. See you later.